I am AI avatar of CA Ratan Mundra. Welcome to this overview of the Draft Master Circular for stock exchanges and clearing corporations. This circular is designed to streamline regulations and ensure the smooth functioning of the financial market in IFSC. It applies to all stock exchanges and clearing corporations, outlining operational and compliance requirements. The objective is to maintain market safety, integrity, and transparency for investors and participants. It also defines governance, risk management, and audit frameworks to mitigate disruptions. Understanding this circular is crucial for market intermediaries to ensure compliance. Today, we'll explore key provisions, suggested comments, and practical implications. Let's begin with the foundational requirements for market operations. By the end of this video, you will have a comprehensive understanding of the draft circular and its impact. The circular specifies that the minimum order size for trade execution is 1 million United States dollars in notional value. To align with international practices, this should also include the equivalent lot size for 1 million United States dollars. This ensures clarity and uniformity in trading, especially for large block trades. Exchanges must consider both value and lot to standardize transactions. This approach helps prevent discrepancies and maintains market efficiency. It also reduces operational risks associated with inconsistent trade sizes. By implementing lot-based thresholds, exchanges align with global best practices. Traders and participants can confidently execute high-value trades. Overall, this provision strengthens market integrity and simplifies trade monitoring. Security-specific actions are crucial for market stability. The circular suggests that all stock exchanges coordinate when implementing regulatory measures such as suspensions, margin changes, or segment transfers. Sharing information ensures uniform application across exchanges. This prevents regulatory arbitrage and maintains investor confidence. Exchanges must regularly update each other on decisions affecting commonly listed securities. Uniform action protects against discrepancies in trading conditions. It also enhances market transparency and fairness. By synchronizing actions, regulators can mitigate risks of confusion or market disruption. In practice, this means a trader sees consistent rules across platforms. Effective coordination is therefore vital for a resilient trading ecosystem. The Liquidity Enhancement Scheme, or LES, allows exchanges to improve liquidity in selected securities. Participation in LES is optional and designed as a business decision by market infrastructure institutions. The governing board must supervise and monitor outcomes to ensure market integrity. Incentives offered under LES are treated as part of the exchange's promotional expenses. This approach aligns with international practices, where LES promotes trading without compromising regulatory standards. By enhancing liquidity, exchanges can attract more participants and improve price discovery. Confidentiality of incentive structures is maintained. Overall, LES fosters a more active and robust trading environment. Exchanges must carefully implement these schemes with proper governance. The circular emphasizes audit and compliance for stock exchanges and clearing corporations. Systems and network audits must be conducted and placed before the governing board. Following this, reports are submitted to the regulatory authority. The proposed timeline for submission is within 4 months after financial year end and board approval. Notably, the requirement for additional declarations from MD, CEO, or CTO may be removed. Audits focus on system integrity, connectivity, and compliance with regulations. Exception observations and previous audit follow-ups are documented. This ensures accountability while reducing redundant reporting. Effective audits strengthen operational transparency and reduce potential risks. Ultimately, robust compliance safeguards market participants and investors. Disaster recovery and crisis management are key aspects highlighted in the draft circular. Each exchange must establish an incident response team chaired by the MD or designated official. The team is responsible for declaring disasters, invoking business continuity plans, and shifting operations to disaster recovery sites. Roles and responsibilities of employees and outsourced staff must be documented. Periodic doctor drills are suggested, but unannounced live drills may be optional due to practical constraints. These measures ensure business continuity even during unforeseen disruptions. Exchanges can maintain operational resilience without overburdening staff. Clear documentation, planning, and periodic evaluation of disaster preparedness are essential. This promotes investor confidence and operational stability. Risk management is critical to ensure market safety. The circular outlines that risk management committees include MDs, non-independent directors, and public interest directors. CRO and CISO should participate as invitees. Some statutory committees may be optional at this stage of IFSC development. This allows smaller exchanges to implement governance without unnecessary burden. Clear risk oversight mechanisms ensure operational and cyber risks are monitored. Regular reporting and committee approval ensure accountability. The approach balances rigorous risk management with practical feasibility. Market participants can rely on standardized procedures. Ultimately, effective governance mitigates financial and operational risks, protecting all stakeholders. Client data management is a central focus. Broker-dealers must maintain KYC records but need only submit them upon request. This ensures data privacy and reduces operational burden. Client code modifications are restricted to prevent manipulation, with only price or quantity changes allowed for unexecuted orders. Audit trails for DMA trades must be maintained for 8 years. These measures promote transparency, accountability, and traceability. Exchanges are empowered to enforce uniform rules while balancing regulatory oversight with operational feasibility. Proper data governance minimizes fraud and enhances investor protection. By adhering to these requirements, broker-dealers maintain compliance and strengthen market confidence. The draft circular provides flexibility in settlement cycles, allowing T+0, T+1, or T+2 schedules for traded products. Exchanges are responsible for informing participants about settlement timelines. Uniform market timings across exchanges ensure efficiency and fairness. Optional neo-sites for data redundancy are suggested, especially given the nascent stage of IFSC. These measures reduce settlement errors, operational complexity, and system risk. Properly coordinated settlement cycles enhance liquidity and investor confidence. Exchanges can maintain high operational standards while optimizing infrastructure costs. These provisions aim to ensure smooth, secure, and transparent trading operations. In conclusion, the Draft Master Circular provides a comprehensive framework for stock exchanges and clearing corporations in IFSC. Key recommendations include strengthening governance, audit, and risk management processes. Compliance should be balanced with operational feasibility, particularly for nascent exchanges. Phased implementation allows exchanges to adapt gradually, reducing compliance burden while maintaining transparency. Provisions on client data, settlement, trading rules, and disaster recovery are designed to enhance market integrity. Stakeholders are encouraged to follow best practices while ensuring flexibility for future growth. By adhering to these recommendations, IFSC can build a robust, efficient, and investor-friendly financial ecosystem. Thank you for watching this overview. Moon Sales and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within GIFT City in India, delivering end-to-end IFSC setup, operational support, and handling compliances, risk management. Renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations, and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network. Scan the QR codes below to stay connected with us.